Alright, what's up guys? Welcome back to the channel. Today is Monday the 13th of March, and tonight I'm going to hit you guys with a long and a short. Going to hit you with that double dose. Now, obviously, it's been an eventful last couple of days here for the market. So, a lot of things we could discuss, and I don't think we're going to go down that rabbit hole. Right? We could talk about the bank failures, Silicon Valley Bank, all that beautiful stuff. And now here's the thing, it's a big deal. Could certainly turn into a bigger deal. But I'm never going to pretend like I'm an economist, never going to claim to have a good deep understanding of the macro game or the banking system. What I do have a good understanding of is the pretty colors and the charts right in front of us. So that's going to be the focus for tonight. Now, I think shit could get pretty ugly here. That has nothing to do with the yield curve, the bank failures, the Federal Reserve. Has everything to do with the charts in front of me. Now, it's human nature to want to point fingers, and there's a couple of things here that we could be pointing fingers at. But what I want to do with you all tonight is what I do in my own trading, and that is just tune out the noise to an extent, focus on trading the chart right in front of you. So here's why I think we could be in for some trouble. So the biggest problem we're seeing in the market right now is on the weekly chart. And you've got a bit of a match made in heaven for the bears. So we got a weekly squeeze. Now, I don't have the squeeze indicator up, but you can take my word for it. We've got a weekly squeeze. And then as of today, starting the week off on a bright note, the big three indicator goes bearish on the weekly chart. So now we got a weekly squeeze and a weekly sell signal. So there's a little bit of significance to that. All right, what does the squeeze give you? It gives you compression. The market is building up energy. It's gearing up for its next big directional move. All right, pretty straightforward. What does the big three indicator tell you? Well, right now it tells you momentum, structure, your moving average crosses. They're all working in the favor of the bears. All right, as long as that weekly sell signal prints, it'll be easier for the market to go lower than it would be for it to go higher. So it's a match made in heaven for the bears where you got compression. All right, we're building up energy, and now inside your compression, momentum, structure, moving averages, they're all leaning a little bit bearish. So it's a probabilities game. Pretty good chance we're not going to be in a weekly squeeze for the next 7 months. All right, at some point the squeeze is going to fire. As long as we got that weekly sell signal, probabilities game would suggest that squeeze fires to the downside. So that's already a big enough of a problem. When you take into consideration the golden rule of a squeeze, once a squeeze fires, you tend to get 8 to 10 bars of momentum. So 8 to 10 bars of bearish momentum sounds like a good time on a weekly chart, but to make matters worse, we don't really have anything to stand on as far as meaningful support if we lose that weekly 200 SMA around 37, we'll call it 37.30. We lose that weekly 21, or that weekly 200 rather. They got nothing left, guys. Now you're seeing that dynamic already on your daily chart. All right, so that big break last week takes you under your 21 EMA, under the 50, and ultimately under the 200 SMA. If you take out your moving averages, you have nothing left as far as trending support, other than previous levels of price support. Yeah, maybe a little bit down here at 37.50-ish. Yeah, you take out 37.50. There's just nothing here, right? Big giant air pocket. So you're already seeing that dynamic on the daily chart. Indicator goes bearish. We take out all the trending moving averages. Well, from here, guys, they can't rip it right back above 39.50-ish. They've got nothing to stand on. No support. Momentum is bearish. Structure is bearish. It's a pretty good recipe for a move lower. So you're seeing that dynamic on the daily chart. And now the weekly squeeze of the sell signal suggests we might be pretty close to seeing that same dynamic on the weekly chart. Again, that dynamic being we're under a 21, we're under a 50, and then we end up under a 200 SMA. In other words, I got nothing left. Nothing to step up and save the market. So that is a problem if you're waking up and buying the dip every day. If you're looking for a flush lower, then this is It's the best thing the Bears have got going right now, as far as the pretty colors in front of us. So it's a pretty straightforward game plan. If they can't get the market back above 4,000, right, that's my line in the sand. If they can't get the market back above 4K, and if they can't do it quickly, I think sometime soon, you see that weekly squeeze fire short. And again, if that weekly chart takes out that 200 SMA, down goes Frazier. So it's all pretty simple, right? Nothing to do with the Fed, right? Not based on the bank failures, any of that stuff. Just squeezes and sell signals. So that's a task in front of them. If they can, and I don't think they do. We'll see. But if they can get it back above 4,000, then maybe we got a different situation at hand. For now, guys, I am thinking they don't do that, and therefore the game plan is short every bounce until proven wrong. And I'm proven wrong back above 4K. So there's my idea for a short. Weekly squeeze of the sell signal. A daily chart taking out all your key moving averages with a sell signal. You short the bounces until you're proven wrong. So it's a game of discipline and it's a game of patience. I might have the weekly chart working in my favor. I might have a daily sell signal. We might wake up tomorrow morning and there might be sell signals from a weekly chart down to a 1 minute. Doesn't mean it's a great entry. So with some patience and a little bit of luck, trying to wait for a decent bounce here. I think tomorrow you got the CPI report. I do believe we're going to hear from the Fed later in the week. So a couple of things here that might shake the tree. If they can shake the tree to the upside, what I'm looking for would be some May expiration out the money call credit spreads. All right, we'll keep it simple. Wait for a bounce. As long as that bounce does not take the market back above 4,000, sell some out the money call credit spreads for May expiration. And again, the thinking there is eventually you see that weekly squeeze fire short, and then we're laughing all the way to the bank. Back above 4K, and we might be wrong. So that's my idea for a short, and again, the significance there is, one, it's the S&Ps. So that means as goes the market, goes the stocks. Right? If we're on the money here, and a month from now, 2 months from now, that weekly squeeze fire is short, it's going to have a direct impact on the rest of the market. So be mindful of all that. Now, my idea for a long here, and this came up in the gold room earlier over at Simpler. So admittedly, I got to put my pride aside here potentially. GLD gold, it's been on my no trade list for the last couple of years. I might have to be a bad boy and break that rule. Here's why. Starting on the monthly chart, it's a beauty. It's a beauty. Monthly squeeze and a monthly buy signal. So there's a marriage of compression and bullish momentum and bullish structure. As long as you print that monthly buy signal, probabilities would all suggest it's all teeing up here for a pretty big move. So that looks really good for the bulls. We take it down a notch to the weekly chart. And now the weekly chart behaves a little bit like an uptrend. And what I mean by that is, you get your first leg to the upside, indicator goes bullish, and look how good it handles that first back test to a daily 21 EMA. Right, big push higher, reversion to the mean, and it holds up like a champ. Stays above the 50, hangs out above that 21, and at no point does the indicator lose that buy signal. So that looks potentially like the early stages of a weekly uptrend, where you rally, you pull back to your moving average, you rally, ideally you go on to make a brand new high. From there you eventually pull back again, find some support, and you keep it moving. So, weekly chart looking good, monthly chart sitting pretty in a squeeze of the buy signal, and your daily chart with a nice gap up today gets a brand new buy signal as well. Yeah, we'll take a quick peek here at the heat map. No sell signals, no warning signs, all looking pretty good. Now here's the key. This is basically the inverse of the short the S&Ps idea. All right, why do we want to short the S&Ps? We got squeezes and we got sell signals. But in terms of working a good risk versus reward, ideal that we try to short them on a rally. It's the opposite here for gold. Why do we potentially like gold to the upside? Big whopping monthly squeeze of the buy signal. Weekly chart's bullish, the daily chart is bullish. You got a whole lot of green beans, but doesn't mean it's a great entry. So what I'm looking for here would be a bit of a dip, and then I might try to plant my seed in the GLD long. So as far as a good entry, it's a matter of aggressiveness. Right? If you're very modest, so to say, you might just wait for your first pullback to a daily 21 EMA. Right? Nothing wrong with that. If you're very aggressive, you might be buying your first dip to a 15-minute 21 EMA. Right? Still aggressive, but a little bit less aggressive. Maybe you're looking for a dip to a 30-minute 21. For me, the sweet spot here to get long gold would be to get the first back test of the hourly 21. And then, as always, guys, you got to see how does it handle that back test. Ideally, it should pull back a bit, find support at the moving average, continue to print that buy signal, and then on top of that 21 EMA, the 1 minute, 3 minute, 5 minute, 15 minute, all your lower time frames should go bullish again, and we should be off to the races. Now, of course, not to say that's how it's going to play out, but it's a little bit of what it would look like if we're going to get a good buy the dip opportunity here. So that is that, guys. Not the sexiest watch list by any means. Right? No Tesla, no Google, no Roku. But I think some good stuff here to sink your teeth into. So as a recap, we're not getting caught up in the bank failures. We're not getting caught up in the big boogeyman known as Jerome Powell. Price action, structure, pretty colors. Everything else, in my opinion, takes a backseat to that. So we want to short the S&Ps because we got a weekly squeeze of the sell signal. We've got sell signals on lower time frames, and we're not far from what is basically our last level of support, the weekly 200 SMA. So that could be a hell of a combo here for the bears. Build up energy, momentum rolls over, structure breaks down. We could be packing a pretty big punch here in that squeeze next time we test that weekly 200. And I think they might have enough oomph to them to break it underneath that level. Then the party really starts. So that's why I want to short the S&Ps, and I'm wrong if we get back above 4K. So wait for a good bounce to short, and then gold is just the opposite. Beautiful, beautiful monthly squeeze of the buy signal. Our weekly chart is behaving like an uptrend, holds that pullback like a champ, and our daily chart pops out a brand new green bean here today. So short the S&Ps, long GLD, but fight for a good entry. And most importantly, know where you're wrong. Right, in my opinion for GLD, at no point should this end up back under 172. I already told you it's on my no trade list. So if I'm going to break my rules here, I got to be strict. Under 172, we got no interest in gold. And back above 4,000 in the SPX, we're going to pump the brakes on short in the bad boy. But there you go, guys. A shorter video, kind of straight to the point. But I, going through YouTube this weekend, a lot of doom and gloom headlines. Right, here comes the market crash, and I'll probably call the video something similar, just to get your attention. But then I will shift your attention to what matters most to us as traders: price action, structure, and the pretty colors. So as always, guys, I hope you find it helpful. If you did, please leave me a like and consider hitting that subscribe button, and I'll talk to you guys later in the week. Adios.